What are you saying, people? I am back today with another video for you, and in this video I'll be reviewing this book I read, which is called How to Think, Act and Invest Like Warren Buffett. So it was written by Larry Swedroe, and basically I'm just going to try and give you the rundown on what exactly the book's talking about. Obviously it's talking about how to invest like Warren Buffett, but instead, some reason, only the first two chapters talk about what Warren Buffett actually does for his investments, how he thinks and how he actually acts and invests his money, and the rest is more based on Larry's own life and how he does things. So the book starts off with an introduction before 9 chapters, and afterwards a conclusion, and then a chapter on 30 different rules for prudent investing. So the first 2 chapters of this book are the ones that show you how to actively invest like Warren Buffett and actually think like him. The rest of the book is mainly based on what Larry Swedroe actually does himself and how he's handled investing in his life. Obviously, he has a lot of knowledge and he's learned a lot from all his investments, and he's trying to share it with us to make us better at investing and also improve the quality of our life. There's a lot in here about improving the quality of your life and how you shouldn't actually be too hooked on active investing. The main topic of this book overall is active versus passive investing. And so from what Warren Buffett has said on the internet and in interviews as well as conferences, the best way to actually invest money is passively. Larry Swedroe talks about experiences from his own passive investing as well as his own active investing, and also brings in a couple of instances where he's mentored people who've tried to actively invest and shown the difference between when they've done that and when they've passively invested. So to start off with, Warren Buffett, obviously Oracle of Omaha, greatest investor of all time. This guy has so much knowledge, but obviously you're not going to get it from just reading this book. That might be why the first 2 chapters are mainly based on the actual investing side of things, and the rest are more based on stuff like how to, lower your taxes, how to find the most tax efficient ways of investing, where to store your money, what is better between indexes, stocks, mutual funds, bonds. From this book, I've grasped that a lot of the investing depends on what type of person you are. Overall, you should be passive investing, because it talks about 2 things. Is the market efficient or is the market inefficient? From what we can learn from Warren Buffett's teachings and from what we read in this book, the market seems to be efficient. That means you can't actively day trade and expect to just get great results. By the end of the year, your results would have been better by passively investing in certain stocks. It's a lot more difficult and a lot more likely you'll lose money if you actively invest and try and beat the market. Potential gains from investing in stuff like the S&P 500, Vanguard, stuff like that, those would be a lot more beneficial for you than trying to, let's say, get into Facebook today, get out in 3 days, swing trade different stocks, based on their earnings and their reports, stuff like that. Another thing which Larry Swedroe brings up is the fact that once you start passively investing, you get a lot more free time to do stuff with the people you love. You get a lot more time to invest in different stuff like real estate. Like, you have the fact that once you start investing actively, you start to lose a lot of focus on everything else. One example I liked from this book was where Larry Swedroe was teaching a class, and he had a jar filled with rocks, big rocks, and said, "Is the jar full?" They said yes. He took out some smaller pebbles, fit them into the jar. He asked them, "Is the jar full?" They said yes. One student obviously said no, getting the idea. Swedroe started taking out gravel. He put the gravel in, he still filled the jar. He asked them, "Is it full?" They said no. Obviously they started to get the idea. He started to put sand in the jar. He asked them, "Is it full?" They said no. He started to pour water in the jar, and until it was full to the brim with rocks, gravel, sand, water, stones, small pebbles, they understood the idea. You got the first fit, the big important things in your life. That can be family, that can be your business, that can be your job, before you start putting the smaller things in your life. So sitting at a computer actively looking at what's going to be doing well in the market tomorrow, sitting at your desk or getting home and reading the articles online, or watching CNBC, or finding out what's going to be doing well tomorrow, what you think is going to do well, what's not going to do well. You've got to first put in the big rocks of your life. And for him, Those things were often like family, spending time with loved ones, improving the quality of your life, exercising, you know, the big important things which can help you to stay healthy, keep your mind. He ends it with a conclusion of how to win the game of life, you have to obviously focus on these sort of things. Most important things in life, the things that you'll miss when they're not there. Lastly, at the end of his conclusion, he leaves us with a quote which I'd like to read. He states that, finally, it is important to remember that despite what Wall Street and the financial press want you to believe, investing was never meant to be exciting. Instead, it is about achieving your financial goals with the least amount of risk. This kind of sums up his overall points from the chapters he wrote about from what he's experienced, where it's not about who takes the most risk, because the most risk could obviously leave you with a lot less money. It's not meant to be exciting investing. Investing might take time to build up before you get the returns you want to see. You don't have to go out every single day trying to gain 5-10% of your portfolio. You're going to have to sometimes just put money in, leave it in your stock, and let it grow for years or even decades. But eventually it'll be worth it if you planned out what you've done right and you set up your accounts properly. So I think this book is a very good book. It's not in the top 3 that I've ever read, but it's very nice. And I think the issue with me was it's a little bit more complex than what the level I'm at now, because it talks about, you know, having a warrant for your family, your kids in case of any, you know, accidents, life insurance. It talks about having a portfolio investment plan so that you can get certain money out by the time you're this age and that age. And obviously I don't think I'm ready to be at that level yet, but it's obviously opened my eyes in different aspects about how you should focus on the big things in life, the big rocks, the important things in life. I think it's something I might read in the future just to look back on and gain important tips from, because the book itself is going to be very useful for many people once they start having a family and they start investing a lot more money than the amount of money that I'm investing right now. So that's it for today's video. That was Think, Act and Invest Like Warren Buffett. Let me know if any of you have read this book or if you've read anything similar to this. For those of you who are, I'd say, over the age of 25, I think this is a good read. I think before that it might be a bit early for some, but by all means go ahead and read it. Thanks a lot for watching. Leave a like, subscribe, all of that. And I'll see you in the future for the next video. Peace.
How could I have any fucking time with all this weight on my shoulders? I used to wish I was older until the day that I